Hello, traders. It is 8:03 a.m. Chicago time on the 11th of March, 2020. It's a Wednesday. This is episode number 1710. I've had it's a full moon for tech issues today. I've had many tech issues, including my headset just now. It just seems like a lot of stuff is not working right this morning. Um, Apologize for the delayed start. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market sentiment following yesterday's close, which was quite bullish in the equities, we have a risk-off sentiment. The bonds are up a handle and 16 ticks in the futures. The euro, the Japanese yen, the 10 years gold are all up. Gold is at 1666 and 40 cents. Crude oil is the laggard today, is the weakest today, trading at 32.97. 32.97 down a buck 39 or $4.05. The S&P is down 94 points. I did post the S&P lock limit numbers overnight. Overnight and well, not overnight, but this morning lock limit down is 27.34. The low is 27.64 and a quarter, just 30 points away. Just as we get going here, I want to remind everyone that that Eric Townsend of Macro Voices has agreed to come on at 4:30 Eastern today. The link to register and attend this is down here at the bottom of the slide. Please register. If you're not going to be able to attend, that's fine. Register to be sent the recording. We'll be discussing the coronavirus, COVID-19, and its impacts on the markets. We'll also be talking about crude oil and what's going on in the energy front. Eric's got a big long history and bio. We'll discuss that during the webinar. We'll start at 4:30 Eastern sharp. The second thing I wanted to let everybody know is tomorrow. Um, Tomorrow is rollover in the U.S. The official rollover to June 2020, the M0 contract, M is a Monica zero contract, is tomorrow morning. I roll my data with the exchange, although many people wait till Friday till the volume actually switches. Doesn't make a difference to me, although this time it may be thin enough that I need to force my data to stay on the March contract. But just be aware that tomorrow is the start of rollover. Uh, Recently, rollover has completed pretty much by the following Wednesday. Just remember, during rollover, there are calendar spreads that often take precedence over your FIFO, first in, first out position in the queue. Also, remember that volume is expected to be higher, and a lot of the volume is just rolling volume. Okay, people just moving their swing or long-term positions from the March to the June contract. So just be aware that that's coming tomorrow. Expiration Friday or quad witching Friday is the following Friday. The date will be the 20th, March 20th. So let's get back to business here. Looking at the overnight releases, the Bank of England actually adjusted its interest rate outside of its normal process by 25 basis points. They're also committing to pump money into the economy. They're paying people's wages who are sick for a maximum of 14 days. And a whole bunch of stuff. There's been a lot on news feeds this morning. Balanced trade out of Great Britain came in at plus 4.2. The forecast is a deficit of 3.7. Very big leap there. And then this morning we got core inflation. In the U.S. came in at 2.4 versus 2.3 expected. And then what's remaining for the day is the crude oil inventories expected at 10:30 Eastern. You can look online to see what the numbers are supposed to be there. And then to finish off today, we have the U.S. monthly budget at 2 p.m. expecting negative negative 240 billion. Negative 240 billion for February. Negative 240 billion. The prior is negative 33 billion. And then we also are looking for the OPEC monthly report. So that's what's scheduled. A lot is not in this crazy market. In terms of what was expected yesterday, here's what I covered. The primary scenario, we were opening, the yellow line here is the last print. We were opening up in the 2841-ish area. I was looking for a dip into the value high area of the prior day for a bounce. If it did not hold, I was looking for it to push even farther down into 76, 77 or so. And then I was looking for a bounce to push into 2860-ish, 2860-ish. That's scenario one right here, this green. That's the highest probability scenario is always scenario one, and so on. Here's what actually happened. I'll show it to you on a 15-minute because everything else is just really noisy. So we open up at 2840, we test up to 46, we drop to that value high as outlined, and we don't just sit there, we actually take a bounce to the open, and then we fall all the way through to the point of control. Once it went through the 77, 79 area, the point of control became the next target, and then beyond that, 36 value low, and then it actually turned around and went all the way up to 84. Remember, I was targeting 60 this in the morning. This high volume node on the composite as an area that is likely to get tangled up. It pushed to 84 in what was a neutral extreme day. So we broke the IB low, then we broke the IB high, and we finished in the upper portion of the profile. So this is neutral because it broke both IBs, and then it finished on the higher extreme. And my expectation coming into the overnight session, which did not play out, was a continued short squeeze into 2898, 2900 and higher. That's what I was looking for in the overnight session. Instead, it just rolled right over. More and more data is coming out. More and more testing is being done. As I mentioned before, look, we're having Eric Townsend today to educate us about COVID-19. I don't know much about it. But I know that there's a huge lack of testing, and that the numbers don't really reflect what's really out there. Anyway, as the numbers come out, I think the news is going to feed into that, and the result is a market that is likely to tank. I might lose you here in a minute. If I do, I apologize. My headset is beeping. Something is wrong, and I don't have a wired one to replace it. But here's what's happened overnight. Let me skip forward to what's expected into today's session, just to give you that before I get cut off here. The expectation this morning, the primary expectation this morning, open in the high distribution, in the big distribution. The big number to worry about here is 2800, 2803, expecting a test down. I'm looking for a bounce back up, and I'm looking for it to exceed, get into the upper distribution of yesterday, consolidate up in here, pending news, further news. So that's the primary scenario for today. Barring that, we get responsive buying immediately. We get responsive buying immediately, pushing through the 2800, consolidating there, falling through. If it falls back through, it's likely to be impulsive, and we're likely now to get that 2715 tested and to start moving lower. The market that generally doesn't turn on a dime, and this may be the day it pours over and drops. Um, anyway, as I said, I apologize for the haste here. My headset is definitely beeping, and I'm going to get cut off here in a minute. Um, so I'll leave you with that thought. Again, I would really like you to sign up for today's webinar. Go to ct.pro/Townsend, capital T, so that we can all get educated about COVID-19 and what the implications are. How much worse could this thing get? We are nowhere near peak transmission here, so we'll see where we go from here. Good luck, everyone, and I'll catch you later. Take care.